The World Bank Group expects the revival of the ECRL and Bandar Malaysia to have a positive impact on the country's economic growth in the medium term. Lead economist for Malaysia, Richard Record, however, urged the government to exercise caution on projects that were being carried out so that the benefits to the people are maximised. He says once the projects are under implementation, Putrajaya needs to ensure careful project management, competitive selection, public procurement and efficient management to ensure the maximum returns on public invested assets. As for the weakening ringgit, Record advised the government to focus on the underlying fundamentals of the economy instead of the short-term volatility. He adds that the focus is on strengthening its fundamentals and improving its productivity and competitiveness, as these would drive the exchange rate over the medium term. Nevertheless, Record says the weakening of the ringgit is benefiting the country's external competitiveness. UBS has acknowledged that its regional CIO, Kevin Tay, had made mistakes in his assessment of the Malaysian economy during an interview with Bloomberg. In a statement today, the banking giant said Tay had inadvertently used some wrong terms given the short duration of the live interview. Among others, it clarified that Tay was referring to Putrajaya's projected fiscal deficit of 3.4% when he said current account deficit. He was also referring to the government's revenue and not GDP when he mentioned that cancelling GST would result in a higher dependence on oil prices. UBS said it regrets any misunderstandings and pointed out that it recently upgraded its 3, 6 and 12-month forecast on the ringgit versus the USD to 4.05 from 4.15 previously. And with the Chinese economy turning around, UBS expects the Malaysian economy to also start to see an improvement in its exports. It believes reforms will continue in the long term and sees Malaysian real GDP growth returning to its trend range of 4.6 to 5% in 2020 estimated. UBS ended the statement by saying that it remains positive on Malaysia's long-term economic prospects. RHB Bank has 2 big-sized IPOs in its pipeline. Group MD Dato' Khairul Saleh Ramli says the lender is a joint global coordinator for the listing of poultry player Leong Hub International, which is launching its prospectus tomorrow. Another listing is also slated by the second half of 2019 by a company from the trading services sector. Both are estimated to be about 750 million ringgit each. He adds that there are 2 or 3 other reasonably big ones coming soon. On another note, Khairul Saleh says RHB Bank is targeting 31 billion ringgit in new and additional financing for small and medium enterprises by 2021. The lender approved 7.2 billion ringgit in new loans to SMEs last year. It currently ranks number 4 in the SME segment, with a market share of 9.06%. It hoped to climb one notch higher to 3rd place in terms of the SME segment soon. Bastet Plantations is looking to pare down its gearing ratio to 0.2 times by 2022 and achieve this target in part by selling plantation land close to urban areas. According to CEO Chow Kok Choi, the group's gearing level stands at around 0.5 times and ideally it should be around 0.2 to 0.3 times. He says the group has land with potential property value and quite a number of properties with potential. The plan over the next 3 to 4 years is to monetize these tracts of land. He explains that the group is looking to sell plantation land near urban areas as the costs associated with the land's upkeep are high and supply of labor to harvest these plots of land is limited. When asked about how much land bank it intends to dispose of as property developments, Chow says he cannot indicate the actual size of the land, but reveals that it was worth between 1 billion and 2 billion ringgit. On whether it will return to profitability in FY19, Chow says the group is uncertain as it really depends on crude palm oil prices. To recap, Bastet Plantations posted a net loss of 51.78 million ringgit for FY18, its first full-year loss since listing in 1973. Revenue fell 23.2% year-on-year to 584 million ringgit. The Selangor government has successfully taken over water concessionaire Splash after Pengurusan Air Selangor's 2.55 billion ringgit offer to buy out the firm from Splash Holdings turned unconditional. Gamuda and Kumpulan Perangsang Selangor, which respectively hold 40% and 30% equity in Splash Holdings, say the conditions precedent in the SMP agreement were fulfilled on Monday. The two companies are referring to the upfront sum of 1.9 billion ringgit from Pengurusan Air Selangor. The remaining 650 million ringgit will be paid in 9 annual installments. Accordingly, Splash shall cease to be a subsidiary of Splash Holdings with effect from April 24, 2019. Splash is the concession holder of Sungai Selangor Water Supply Scheme Phases 1 and 3. It controls about 45% of the treated water supply in Selangor, Kuala Lumpur and Putrajaya. The state's acquisition of Splash is part of an effort to consolidate and restructure the water industry to achieve uninterrupted water supply nationwide.